Welcome to Financial Freedom series. In this upcoming video, we are going to learn everything you need to know about financial markets, financial instruments, the money matters, and how to invest properly. Hello everyone, I am the Speedrunner and I am here today to tell you how to become financially independent through smart investing. Today's our session is going to cover about the financial instruments, the why and where to investment. What we know about investment, what are investments actually, why do we need to invest, and if we know we want to invest, where do we want to invest? All these doubts are going to cover in today's session itself. So stick with me to the end, like, share and subscribe. Thank you so much. Once upon a time, a great investor named Warren Buffett said, if you don't find a way to make money while you sleep, you will work until you die. It's truthfully said. You need to make the money work for you instead of working for the money. Yeah, it's alright to work for a salary, but it's wrong to spend every rupee of the salary in that month itself. You need some for saving, some for investment, and this is how you can attain your financial freedom. The only way is through investment. At least that's the way I know of. Now let us start with the most simple. What is investment? The money you earn is partially spent and the rest is saved up for meeting future expenses. Now for example, to simplify it, you earn rupees 100 every month. So on day 1 you get rupees 100 and by day 30 you would have spent 95 rupees. And you will keep 5 rupees aside saying if next month the salary comes in late, you should not have problem. So that is 5 amount is called saving. But what if instead of saving that 5 rupees, you invest or you give loan to someone of that 5 rupees? Doesn't sound inspiring? Now it makes that 5,000 rupees 50,000 rupees. And now that 50,000 rupees will be generating revenue for you. Instead of keeping your savings idle, you may like to use the savings in order to get return on it in future. This is called investment. There are only 3 rules of investment. Invest early, invest regularly, and invest for a long term. It's not gambling. Investment takes time. Like all good things take time. So invest regularly, invest early, and invest for a long term. Bill Gates also once said, I bought my first stock at age of 16 and by day 2 it was too late. Investment must start as early as possible. कल करे सो आज करे सो अब. Now let's go further. Why is investment important? Now you know you invested, but why can't you just keep that money aside and then use? Why is the need to invest? So if there is a 6% inflation rate in next 20 years, rupees 100 purchased today would cost rupees 321 in 20 years. I will show you how soon in an Excel sheet. So let us move on to the Excel part. 100 we have goods. Now in this column we have saved rupees 100 in our piggy bank, and here we have invested at 8% return. Now let us see what will happen. The cost has increased. It was not a surprise. 100 rupees today is 168 rupees in future. Means if you are going to get something, for example, let's say a chair of rupees 100, after 10 years you are not going to get the same chair for rupees 100. It will cost 168, 170 rupees. Now if you want to buy that chair and you want to save up, you have saved up the money for 10 years, 100 rupees. It will be 100 rupees in 10 years. This is inflation. If you were able to buy the chair on year 1, you won't be able to buy it on year 10 or year 5, 4, 3, 2 on that matter. But instead of saving it in your piggy bank, you invest it. Like here, your 100 rupees after 10 years will become 200 rupees, which means You could buy that chair you wanted and still have some amount, about 30 rupees to spare. And that is the magic and the miracle of investment, and that is the reason you need to invest, so that you can meet out your future expenses. You can buy huge bungalows, you can buy cars, you can pay off your loans if you want, and that is through investment. Moving on, what investment can help you? Investment can help you create wealth. You have heard the saying that the wealth whispers. The wealth is what creates billionaires and millionaires. And these are not through their savings, they are through their investment. It can help you achieve your financial goal. For example, if you want to study in a big university, you can. It can help you beat inflation, as I have shown you in the Excel before. If you have no big aims, you can at least save up for your retirement. If you want to go at age of 70, how much will you work more? Don't you want to rest? Don't you want to pursue your hobbies? Pray out to God? So why wait for that? Save for your retirement, and we will learn how to save in the further videos, so that once you go to retirement, you don't have to look for money, you don't have to sell your house. You will have money to enjoy your retirement. And lastly, how to achieve is to grow your money. So investment can help you to achieve all these things. Now, main question. Where to invest your money? Now I am just going to point out the names. Those who wants to understand what is in that name, you can follow me till the last videos. But if you don't know and want to learn, you can follow me to the end of the videos. But if you know it, you can start investing early by yourself. A few of them are short-term, debt, equity, and there are a few others which I have personally liked, which don't fall into all of these categories. So first of all, what is short-term? Now, if you lend a money, there is a chance that debtor may not repay you. And if you give that 5 rupees away and next month your salary does not come, what will you do? So for that, we have few instruments. First is money market. Second is short-term mutual funds. Then we have liquid funds. Finally, we have banks fixed deposits. These deposits are usually for a longer term, but anything above you can withdraw instantly. They are overnight funds. There are ultra short duration funds. These are few good funds I personally use. I'm not going to name those mutual funds, but you can use it too by your own research, or you can wait till the end, till the time I reach the topic of mutual funds. These are for short term, for few months. They can stay up to a year, but not usually more than that. You don't want to extend the life too much because the rate of interest is not particularly good in this case. Then we have actual debt, where you can get a fixed return, about 7 to 8%, such as public provident fund, deposits or debentures of companies, government securities, sovereign gold bond, and debt mutual fund. The public provident fund, or the PPF, you might have heard it if you are a salaried employee, is a one kind of savings for you which your employers provide, where your employers also put a part of money. Now, beside this, sometimes big corporations also need money. So where they come to? They either go to bank or they come to public at large, and they issue debentures for us to buy. And we can purchase the debenture and get a fixed rate. The higher risk of the company getting bankrupt, the higher rate will be the rate of debenture. And the lower risk, the lower rate of debenture. The coupon rate which I am talking about, we'll learn that later. It is interesting to learn how the credit rating and how the market conditions can affect the rate of interest of the debenture. Then is government security. It is an extremely risk-free return. Companies have chance of getting bankrupt. I can't see in the foreseeable future the government having a chance of being bankrupt. Yes, government also needs money and they get the money through us. This is known as government security. There are T-bills. There are various types. Then we have sovereign gold bonds. This is something different and this is interesting because it is akin to purchasing gold, but you are not actually purchasing gold. You are purchasing a bond which is linked with gold, and I personally have few of those too. They are usually in grams, 1 gram of sovereign gold bond. Then if you don't know which company to invest in, on which government security to invest in, you can always do the safety option of debenture mutual funds. Here you provide your money and the money gets pulled together and given to a fund manager who invests it in debentures. These are also a surefire way to get good returns, and they can range from anywhere from tomorrow, like overnight, and to get like for 10 years. Then we have equity. In easier language, equity is the stock market you have heard of a lot. It's in the news, it's in the articles, it's in any investing 101 guide. Equity. I'm just going to point out the names. We are going to learn all about those later. You can invest in equity linked savings schemes. They provide a tax benefit, but not under the new scheme. If you are interested in tax, you can get a tax advisor to point it out for you, or you can research that on your own. But equity linked savings schemes provide you with tax benefit. Then we have the shares which you purchase down on the share market. Then we have exchange traded funds, which I personally love. They are one of my favorite things to invest in, and it would be yours too if you follow my video till then. Then we have equity, hybrid and sectorial mutual fund. And then we have portfolio management services. And there are few others which I am personally interested in, but I am not planning to invest in that currently, which are gold and silver, REITs and InvITs, real estate, which means buying houses, multi-asset or commodity fund, and alternate investment fund. Gold and silver is the jewelries your mother, your grandmother might have purchased, which you might have redeemed. That is gold and silver. They are also good investments. Then we have REITs and InvITs. These are good topics and which will be covered in the separate videos later. But in simple words, real estate investment trust and infrastructural investment trust. Many of the times they are kind of like debt. When real estate companies wants to get money, they provide REITs, and these are actually big and huge amount. So many of the time mutual fund buys those REITs and provides us with a fund or a unit of those. Then real estate, you buy land, you buy houses, and then you sell them later. Then we have multi-asset commodity fund, which is going to be learned in the mutual fund video. And then we have alternate investment fund, which is like mutual fund but for more rich people, where the minimum investment amount is at least 1 crore. They are not going to talk to you if you don't have 1 crore. So this is for another topic, and it is personally interesting because they work with private equity, they work with other different kinds and risky instruments which provide us with more than 100 times the rate of returns. There are few, but they also have chance to take away all your money and give you zero returns. So these are extremely risky and extremely for high valued clients only. These are interesting. If you want to learn more of them, you can search about them. Now we have learned everything you know about where to invest. There are more, but these are my recommendations if you want to invest. Now, before we need learning where to invest, we also need to learn what are the rules of investment. Investment might look easy, but there are rules, a certain set of guidelines you must follow. First is start a strong foundation by building a solid personal finance. You can't invest if you don't have good enough salary. You must have enough salary to save for your earnings and then invest the rest of amount. Then assess your risk tolerance and diversify your investment. Don't put all your eggs in one basket, and do your research carefully about where you are going to invest. Have a plan, go through a financial advisor, and stick to the plan. You must always treat your investment like a business and start investing as early as possible. There is no need to invest once you reach a certain age. You can start investing today itself. Then you have to hedge against all the potential losses. Sometimes market might go up, sometimes market might go down. You never know. So you must always put yourself at the risk and always hedge against potential losses. Then avoid paying high investment fees and taxes. Plan your investment carefully, avoid paying huge amount of tax, avoid paying huge amount of brokerage fees. This is the only way you can maximize your return. And how to avoid high investment fees is through understanding which platform provides a low brokerage. There are many platforms which provide low brokerage of demat and trading account. So try to obtain for those. Then understand what you are investing in and add to your investment over time. You don't need to add everything at once, lump sum. You might add lump sum, but always stick with an SIP plan. The clarifications about intermediary and investment, and invest only if you are comfortable. There are many fraudulent schemes out there to try to take your money and refuse to invest if you are not convinced in their business. There are all the rules you need to know. Invest wisely, invest carefully. Thank you so much for watching. Please check out our next videos too. Till then, bye.